Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. It is Wednesday, February 19th. I'm pretty sure we've looked at this one before, but we're going to take a look at Celanese. This is out of the materials sector. Before we get too far in the video, if you could do me a big favor, it doesn't take but a couple of seconds of your time and it really does help out the channel. Hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday whenever the market's open. We take a look at a company's stock that's pulled back on the day, run it through my screener, see if it makes it onto my watch list. And there is also the thanks button down below for anyone who might want to buy me a cup of tea. Really do appreciate everyone who's taking the time to do that. And a special thank you to the subscribers and the viewers of the channel. You guys are awesome. The channel continues to grow because of people like you. And share the videos with anyone you think that might find value out there as well. Now, this is the Vested Interest Stock Screener. This is the screener that we will be running through and the criteria we will be running through in the video. At the end, we'll see how it shakes out and see if it makes it onto my watch list. We do add in price to book for companies out of the financial sector, but for this one being a materials company, we are just going to look at 5 of 8 to make it onto my watch list. Now back to Celanese. Check them out at their homepage, www.celanese.com. That's www.celanese.com. That is their homepage where I pulled this information from. And over the last 100 years, Celanese has evolved from a small experiment in a backyard shed in Switzerland to a global technology and specialty materials company with leading businesses in key geographic areas. The Dreyfus brothers had a vision for the company that included discovering market needs and finding ways to fulfill them. By honoring their ability to diversify and adapt, the brothers were able to expand the company to one of the largest chemical manufacturers in the world, and that's really their bread and butter. They are a chemicals company that manufactures a lot of products across different industries, right? Automotive, chips manufacturing, manufacturing in general. If you were to go to their homepage, you're going to see a lot of products in a lot of different categories that they offer. And you can read the rest of this and go check out their history again if you want to check them out on their homepage, www.celanese.com. Over here to the right, they are headquartered out of Dallas, Texas. But they do have a couple of locations down in South America, and most of their locations here in America, you can kind of go over where they're at, right? Corporate headquarters, regional headquarters, commercial centers, labs, manufacturing, and joint ventures. So you can go through that as well, give you kind of an idea of where they're spread out through Canada and down into South America even. Mostly in the United States, obviously. Now, the reason we are looking at them down huge today, 21.46% drop. Again, we have covered this company, I believe, before, but man, a big drop like this, I'm going to take a look again and see what's going on. 21.46% drop on the day. We are talking about Celanese Corporation, ticker CE, out of the materials sector. Closed the day at $54.91. Looks like they are down slightly in the after hours whenever I pulled this as well. 52-week range as low as $52.97, as high as $172.16. Very close to their 52-week low with this drop today. A market cap of $6.02 billion, so a smaller cap company here. They did not have a beta listed. I'm assuming this really blew that out of the water, and their PE wasn't listed either, so I'm assuming that is negative. EPS is negative. That was listed at negative 13.86%, so that's not good. Earnings date sometime between May 6th and May 12th, and they do have a small forward dividend. They have cut the dividend recently. We'll see that here towards the end of the video. Forward dividend of 12 cents. They are quarterly payer, I believe, and their dividend yield is very small at 0.17% now after the dividend cut there. Ex-dividend date February 25th. Looks like they're going to pay out March 11th. So if you were to buy them now, you would be in line for the next dividend. Again, it's pretty small, but you would be in line for the next dividend. You have to buy them on the 24th or before. Buy them the day before the ex-dividend date or before, not on the ex-dividend date. 1-year target estimate is $84.11 according to Yahoo Finance, which does speak to some potential upside as far as price appreciation. Now, jumping over to the right, I usually like to look at dividend yield theory to see if a company is potentially undervalued. For this one, since they cut the dividend, it's really not going to be applicable, and it would really show, severe overvaluation because their 5-year dividend yield is 2.25%. After the cut, it's down to 0.17%, or over here where it says forward annual, 0.1%. And typically, since this is lower, it speaks to overvaluation. But again, they've recently cut the dividend, so this really doesn't apply. Payout ratio is low at 27.89%. I believe that's where it's at after the cut. Now, dropping down, we want growing free cash flow over time, because typically if a company has growing free cash flow, they can do some things. They can pay down debt, they can make acquisitions, reinvest back into the company, buy back shares, pay a dividend, which this company does, even though it's small right now. And they can grow that dividend over time. So we want growing free cash flow. Going back to December 2021, you can see 1.2 billion in free cash flow. 2022, 1.27, so slight downturn there. 2023 up to 1.3 billion there, in the trailing 12 months, which would include all of 2024 at this point, 844 million. So we're definitely seeing a downturn. They are repurchasing some shares, or they were back in 2021, 1 billion there, big drop, 17 million in 2022, nothing in 2023, nothing in the trailing 12 months. So they've not only seen a decrease in free cash flow, they've seen a decrease in the repurchase of shares, and actually the last couple of years, none at all. Jumping over to stockanalysis.com, another source I go to for information. The previous site was Yahoo Finance, not affiliated with either site, just two sources I go to. And I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. It's a way to back check information. Recommend at least two, if not three sources. They have 14 analysts from over at stockanalysis.com that have taken a look at this. They call it a consensus hold. Low estimate of $73 would represent a 32.94% increase from where it currently sits. Average estimate of $97.79 would represent a 78.09% increase from where it currently sits. And if it happened to hit their high of $130, that would represent a 136.75% increase. All the while, you could collect that very small dividend that they are paying out now after that dividend cut. Now, statistics here, I like to jump in, look at return on invested capital and return on equity, and see how well the company is reinvesting its capital back into itself. And I like 10% or better for both of these metrics. Now, these are not looking good. Return on equity, negative 22.89%, not good at all. Return on invested capital, negative 2.26%. Really, all around the board, this one just has some pretty negative numbers associated. EPS growth is at negative 5.44%. I typically like 5% or better forecasted over the next 5 years. Revenue growth was forecasted at a little over 1%. Sorry if I didn't mention that. Quarterly payer here, payout ratio, again, I think with the cut, it's around 27%. At least that's what Yahoo Finance had it at. They did recently cut it down 23.93%, which is pretty close to the drop they had today. So that's a big drop. Buyback yield is positive. Whenever they are buying back shares, they're doing it at opportune times, and shareholder yield is positive at 4.06%. They do pay out, like most companies, on the March, May, August, November timeframe. Going back here to July 2022, you can see they were paying 68 cents. They raised it up to 70 cents in October 2022. They kept it there until the recent drop, February 2025, down to 0.03%. And maybe that's what it is. Maybe they recently announced that dividend cut, and that's part of the drop. I'd have to do some research on the news around this one. But as you can see here, down to 3 pennies per share per quarter. And again, they do pay out on that March, May, August, November timeframe. All right, let's check out the screener. Understand the business, right? They're a material company. They have a similar, actually, to like a LyondellBasell, a lot of materials, chemicals company that they turn into materials for other products for other manufacturers. Growing free cash flow, no, it was down actually for the last several years. Growing dividend, no, they recently made a cut. Dividend payout ratio is under 75%, I believe, with the cut there. Dividend yield theory, you can't really use it since they just made a dividend cut, so no check there. It is within 15% of a 52-week low there. Return on invested capital nor return on equity, neither one was over 10%. Earnings per share growth was negative, so it wasn't over 5%. So we're looking at 5 of 8. This one would not make it onto my watch list. And because of this, I may look at LyondellBasell to see if that one was maybe down today as well. Again, very similar companies, LyondellBasell and Celanese there. Celanese being this one, but this would not make it onto my watch list. Not quite there yet. It needs to drop significantly more or get some of those negative numbers back to positive. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover, like Celanese, down in the comment section, go ahead and drop it below. I'll work it into the rotation. And let me know what you think of Celanese. Is it one you're watching with this big drop, or maybe it's one you're buying, or were you part of the reason it was down and it's one you are selling? Would love to hear from you. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for tuning in. Thanks for stopping by, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select the criteria, or seek the advice and counsel of a certified financial advisor.